Alright, good afternoon everyone. Today is Wednesday, September 26th, 2012. The results you can see are right here. Plus 3 ticks on gold, plus 2 ticks on crude, plus 9 ticks on the YM. That is how we ended the morning. Now, if you have not taken a free trial with us, go to www.cfrn.net/apply and sign up for the free trial. The free trial has everything you see here. You get 5 business days in our live trading room for 2 hours per day. And all we ask for is your name and your email address. We don't need a credit card. All right. Now let's get on to the trades that have happened today. All right. I didn't take any trades here on the ES, but I'll show you what transpired with the ES. All right, those of you who know the DIFEC, the new yellow line right here, you can see right here in the pre-market or in the Globex, it bounced off of that a couple of times here, and it moved down nicely once it did actually bounce off it. As the market opened up in here, 9:32, right in here, 9:32. We were watching. Where is that? Right over here. We were watching the market move down to the weekly trading zone. We weren't going to actually trade into the weekly trading zone, but as it was moving down, it pierced the red envelope down here on the DMT. That's when I wrote this number in here, 1426.75. I said watch for it to get down to 1426.75. I did that over here when it pierced over here. You can see that it did work its way down to 1426.75. We didn't trade any of this because it was going into the weekly trading zone, so I didn't trade anything in there. By the time it pulled back up over here, we had a higher low right there. So we had changed the trend at that point. Okay, and you can see I drew this trend line in way back here at 1040, and now at 1225, it's still honoring that trend line that I had drawn in. So that right there was the change right there. All right, that's why I didn't want to go short up here. Had I gone short up here on the pullback, we probably would have gotten a break even on it. I don't think it went 2 full points from the entry, so I probably would have moved my stop up to break even. Bruce, yes, there are zones down below there. And you can see it went right back up to the weekly trading zone. It came back in over here. There was a double top right in here, so I wouldn't have taken this trade anyway, and then it was going right into the weekly trading zone. So there were a couple of reasons not to take this trade right here. This one right here, the only thing stopping us was a zone right up above. Okay, this happened during the break, but for argument's sake, on the pullback right here, close above that trend line should open the door to higher prices, and it did. Okay, that's what we should have been looking at. This one right here, a down close below this trend line should open the door to lower prices. You can see we still don't have a down close. But I'll leave that on there because if it happens, that would be something to consider. Okay. Let's see, the NQ. We did take a couple of trades on the NQ, but we ended up break even. Let's see, right over here was the one trade that we took. Now, on the 4-tick range charts, you're going to see me go through a flurry of 4-tick range charts right here. The setups are all the same. We're looking for the same thing to happen over and over and over again. No matter what the symbol is, we're looking for the same setup on the 4-tick range charts. And my risk is always 8 ticks. Okay, always 8 ticks. Every trade I put on, the risk is 8 ticks. All right. In here, what we look for here on these 4-tick range charts is we look for bullish or bearish crosses of the BBC by the MA1. Okay. Frank, I'll get back to that in a minute, okay? Bullish or bearish crosses right here. This is a bullish cross. The MA1 crossed up above the BBC, and as it crossed up above there, it pulled away from it, came back down and tested it here, giving us an up close. A close in the direction of the cross is what you're looking for. Once you get that, you want to look down on the bottom and see if you have a divergence to support that direction. We did. I went long. It gave a point profit in it, probably a little more than that. When it closed up above the BBC here, I moved my stop to break even. It came back and took me out of break even. There was another opportunity. Well, this one pulled back and tested the yellow line. Gave a down close off the yellow line with some bearish divergence down here on the bottom. You'll find that when you have divergence supporting those trades off the yellow line, that it usually works out pretty well. In this particular case right here, when it pulled back and it tested the yellow line, I had suggested shorting the yellow line, fading the yellow line down to the BBC. Then at the BBC, once it tests the BBC and gives an up close, you could go long because we had bullish divergence. Okay? So there was an opportunity to do both of those things in there. Moving along, we didn't have any opportunities in here. Here we had a bullish cross, tested the BBC with an up close with bullish divergence. If you would have gotten long right here at 69.75, 8 ticks risk would have stopped you out right here at 67.75. Okay, so that trade right there would have lost had you have taken that trade. I did not take it. As a matter of fact, I didn't take any more trades in here. I took one during the break, and I made a couple of ticks on it. But I didn't take any more trades in here during the day on the NQ. One just actually set up right here. It tested the BBC, gave it down close with bearish divergence right here. Okay, bearish cross, test, down close, bearish divergence. That's it. I didn't talk about the YM this morning. We did take a couple of trades on the YM. Let's do this. In here on the YM, after we got the bearish cross this morning, it pulled back up, tested the BBC. I had an order waiting there to short it. I shorted it there. I bought it back down here. It went down just a little farther than that. It pulled back up and tested the BBC. I shorted it again here when it hit the BBC. I got out of it. I was quick with my risk. I don't remember what my reasoning was to be quick with my risk. I think it was because we had a high impact news event coming. But I was very aggressive with my risk and I ended up getting out of it break even. You see when the news did come out here at 10 o'clock, it was bad news on the new home sales. It dropped down pretty good and then it went back up, tested the yellow line up here. And again, we had divergence down here when it tested the yellow line, and that usually works out pretty well. As you can see, it did. It dropped from, let's see, up here at 13,390 all the way down to 13,330, 332. Let's just call it 330 and say 60 points. Okay. It was a nice move. Anyway, look at it. It was a nice move. All right. I didn't do any more trading on the YM this morning. That was all I did, and I ended up, plus 9 ticks on that. Okay. So the NQ, the one that I just pointed out a minute ago, tested the BBC with a down close. You can see that is going down. What you anticipate when you have these divergences down here, when this green line is moving away from the cycle portion, you anticipate that the green line is going to move back into it. All right, turn down and go back into it. That's what we're looking at right here. All right, same thing over here, same thing on every chart. When you have these divergences, you anticipate the green line is going to work its way back into the cycle. Okay, you see it's touching it right there. That's what you anticipate. Okay. Let's see. Over here on the gold, I did take some gold trades this morning. I was up pretty good on gold at one point, and then I had a couple of losing trades in a row. Let's see. I'm just going to blow this up so you can see it a little bit better. There were some really nice trades that I missed, unfortunately. But right in here, right at the open, we pulled back up and we hit the yellow line right here. Okay. Let me scroll back. We hit the yellow line right here and we had the bearish divergence. Again, when you have that divergence and it's hitting that yellow line, you can get some nice movement out of that. Once it did that, there was another opportunity to enter in right there. We had the bearish divergence down here again, and it moved down very well. All right. It started to change directions here, and we had some bullish divergence, but it dropped all the way through the BBC again. So it started getting sideways right in here, right in this area, as we're approaching the high impact news event. Then we had a bullish cross, a test of the BBC with an up close with the nice bullish divergence right here. There was a nice opportunity right there. Drop back down again, bearish cross right here, tested the BBC with a down close with a bearish divergence. I did take this one, a bullish cross. This was after the news event, okay? It came back down, tested the BBC, and gave an up close with the bullish divergence. I did get long there, and I ended up taking a break even on that. Up here, it gave a bearish cross, tested the BBC with a down close. I got short on that, and I took some profit. The next one I got short on, and I took a break even. The next one I got short on, and I took some profit. Then I got long on this one, and I took a stop. I got short over here, and I took some profit. I got short here, and I was stopped out. And I believe that was the end of my gold trades. There were more of them. You can see a nice bullish cross right here with the test of the BBC and an up close with the bullish divergence. We didn't have any divergences over here when it was testing over here. Okay, over here we had a bearish cross test of the BBC with a down close right in here. Okay, right in there. And this is where we are right now. It's chopping sideways right here right now. As far as moves off the yellow line, there was one right up here. Another one right in here. Now there was divergence on the first one. There was no divergence on the second one, or the divergence was going away on the second one. Let's go back and see if there were any more of those right in here. The divergence was the wrong way on this. It had bullish divergence on that stop right there. Let's see, over here again, bullish. The divergence was the wrong way. It was bearish divergence for bullish move. Alright, and that was pretty much it on the gold. So we ended up positive on the gold at the end of the morning session. I missed some really nice trades in there. And when I say I missed trades, it doesn't mean I decided not to take them. It means I was doing something else. I think we had 8 different markets going this morning, so I was pretty busy. Let's jump over here to the Russell. Okay, we had pointed out a couple of nice trades on the Russell this morning. This one right here in particular. 834.7 is where I had suggested shorting this. We had some nice bearish divergence, and that one dropped. I believe it dropped 4 points, just about, maybe 4.2 points, I think. That very nice move right there. It came back up, tested the yellow line right here. We didn't have divergence at this test, but it did end up dropping down pretty nicely. Again, tested the yellow line right here. We did have a little bit of divergence on this one, and that dropped down pretty well. We got a bullish cross after that, tested the BBC, but when it tested the BBC, we didn't have any divergence down here. All right. Let's see, over here, early on in the morning, we had a bearish cross that tested the BBC with a down close, and over here we had the bearish divergence, and here again, same thing. It tested the yellow this time, went right through the BBC, tested the yellow, and we had bearish divergence at that time, and that gave a nice move down as well. Okay, that was the Russell. Now, I had said I wasn't going to do every single market that we traded in, because soybeans I'm not going to do, because it really didn't do anything. I didn't trade soybeans, we just glanced at it. This here was the 6E, and I was just showing on here on the 6E when it hit the yellow line. Okay, here it hit it, here it hit it, here it hit it and went right through. But there was divergence to support that one right there. That moved down. Let's see, over here, what was I looking at in here? Right in here it hit it and it moved down. Here it hit it and it moved up. Here it hit it with divergence, and it only moved up, probably 4 or 5 ticks there. But that's a point on the ES, and that gets into yesterday. All right. Now I've done gold, the Russell, the NQ, the ES, the YM, the 6E. I haven't done crude oil. We had crude inventories come out today. All right, so crude was pretty crazy. I took just a couple of trades on crude. Let me blow it up so you can see it. I only took a couple of trades on crude. It was a little jumpy. Okay. Now this yellow line was originally designed for the crude 4-tick range. It just happens to work on everything, but it was originally designed for the 4-tick range crude. All right, that's what I had started looking at it with, looking at it seriously with this. Well, it was also designed for another thing on a much larger time frame. But you can see when it comes up and it hits the yellow line with this, it usually gets a nice bounce off of it. Okay. We got a bullish cross right here. This was just before the news event, right? We got a bullish cross. It tested the BBC with an up close. That one gave about 5 or 6 ticks, and it dropped through and it hit the yellow. When it hit the yellow, we still had bullish divergence down here, and that shot it up. After the up close, okay, Mike, I'll be quick. This is my last one. After the up close, it was 89.87, and it shot up to 90.04. Okay, so that's whatever that is, 17 ticks, $170 a contract. This was just a regular trade setup, bullish cross, bullish divergence, bullish close. off the yellow right here with a little bit of bullish divergence. Then I didn't do anything in here because at 10:30 was when the crude inventories came out, and you can see it just rocketed the thing all around here. In here I started looking at it again. There was a bounce off the yellow line right here for a good move down. Regular short trade right here, and then a bounce off the yellow line with divergence for the move down. And there was divergence over here too, I should point out. Over here, regular short trade. Over here again, this was a regular short trade, but the cycle was going up quite a bit. In here I took a long trade. I ended up taking a break even on the first one and a little bit of profit on the second one. Okay, right here you can see when it hit the yellow line and it had the bullish divergence. That was an opportunity right in there. Take some profit. And that was it. That was where we ended the crude for the morning. All right, so I think I've gone through everything. All right, as I wrap this up, reminder to everyone who is on a free trial, you should check your inbox. You should have an email from me in there telling you what it takes to become a partner, because you need to become a partner to get into the partners meeting that we're having tomorrow night. Every Thursday night, 9 p.m. Eastern Time, we have a partners meeting. All you guys who are partners, just a reminder, tomorrow night there's a partners meeting. And if you have not taken a trial with us, go to www.cfrn.net/apply. All right, that's it. Record.